The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I've got two more stocks for your aggressive growth radar screen. Having a little trouble with the system today, so I'm not going to be able to have the pen, so you're going to have to follow along with my mouse. The first one we're going to do here is Delta Airlines. DAL is the ticker. It's a Zacks rank #1 strong buy, and it has A for growth, which is what I'm all about. This one also sports an A for value. So let's go a little bit deeper into this stock and see what's up here. So we see the earnings history. This is the first thing that I like to look to. And I can see that they've been beating and beating and beating. 4 straight beats, just a little bit over the analyst estimate. You really kind of want to see that, a nice steady flow of beats like that just tells you that they're not below the radar screen or the blowout number is really going to get you noticed. So they don't really have that. As we look at the earnings estimates, you can see for this quarter moving up from 203 to 226. That's a nice move. Next quarter holding still with a little bit of movement in there, 152 to 152 over the last 60 days. For the full year, we're seeing that 50-cent increase right there. Is that or 40-cent increase, 665 to 705, and then a little bump up for next year as well. So that's why your Zacks rank is a #1 strong buy. If you take a look at the valuation here, only 8 times forward earnings with about 6% top line growth. That's very good to see. 2.6 times book is nice. The stock market doesn't really value their sales all that well, giving it a price to sales of below 1. But as we can see, operating margins moving up nicely. I like to see that. The same thing here with net margin moving up around 10% there. Great to see that for an airline, which traditionally doesn't have that sort of capability. If we take a look at the chart here, boy, it's bouncy, 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 bouncy. But the earnings estimates are gliding higher, if you will. So this is one to definitely keep on your radar screen, Delta, DAL. All right, up next is the Scott's Miracle-Gro Company, and it is also SMG is the ticker. It's a Zacks rank #1 with a growth style score of A, value style score of C. This one's got a whole lot more going on, so let's just jump right into it here. We see the earnings, it's been hit and miss. So 2 misses followed up by 2 beats, and they're both a little bit big here. So it gives you an idea that the analysts aren't certain on what's going to be happening here. So for the current quarter, we've seen estimates actually come in quite a bit, moving from a loss 63 cents to 89 cents. But next quarter ticking higher by a penny, and then the full year is still going to be earning. And you can see that number the last 60 days has moved from 428 to 450. And next year, 469 to 489. Now, the Zacks rank focuses more on the full year than any quarterly move. Of course, those quarterly moves are impacted into the full year move. Even though you've seen this number move down, this number is moving up, and that's the more important one to the Zacks rank. Jump over to the valuation: 24 times forward earnings with a 17% top line growth. Kind of that's why it's got a C for value. 7.5 times book is a lot, but the market values their sales. They give them a 2 times, just about 2 times price to sales multiple. We see operating margins looking good over the last 3 quarters here, but the main thing is this big move in net margin here. And if you take a look at this next chart, you're really going to see what this does. Woo, up and away on the Scott's Miracle-Gro. I mean, $60 at the beginning of 2019, 110, let's call it 100, and just about 110, 109 today. That is some sort of move. Obviously you got beaten up here, but things have turned around quite steadily there. And you go from almost 0 margin to 12% net margin in 3 quarters. Things are going to be looking good for you. So that's another stock to keep on your aggressive growth radar screen, and that's SMG is the ticker. That's all for this week. Be sure to join us next time as we look at 2 more aggressive growth stocks for your radar screen.